Introduction. Hello everyone, and welcome to Next Vol. Today, we're bringing you an in-depth analysis of inflation in 2025 and the best strategies to effectively protect your savings. After several years of economic instability, it's more important than ever to understand the financial challenges ahead and how to safeguard your purchasing power. Let's dive into it. Inflation in 2025, where do we stand? Since the rapid rise in inflation between 2021 and 2023, global economies have experienced relative stabilization. However, according to recent projections by the International Monetary Fund, (IMF), and the Organization for Economic Cooperation and Development, (OECD), inflation is expected to remain at 3 to 5% in 2025. This persistent inflation is driven by key factors such as the sustained increase in energy prices, geopolitical tensions, the relocalization of supply chains, and a global monetary policy constrained by historically high levels of public debt. In this context, inflation should no longer be seen as a temporary phenomenon but rather as a structural challenge that must be accounted for in all financial decisions. Why is inflation a threat to your savings? Inflation silently reduces the real value of your savings. At an annual inflation rate of 4%, €10,000 today would only have the equivalent purchasing power of €9,600 in 1 year. Many traditional savings options, such as standard savings accounts or term deposits, currently offer returns below inflation. This means that keeping money in these accounts effectively reduces your purchasing power year after year. To protect your wealth, adopting active strategies tailored to this new economic environment is essential. 5 strategies to protect your savings in 2025. 1. Invest in real estate and tangible assets. Real estate remains a safe haven against inflation. Rental income, often indexed to inflation, naturally adjusts to the cost of living. Assets like farmland, forests, and certain infrastructure investments also offer strong resistance to monetary erosion. 2. Buy resilient company stocks. Companies that can raise prices without losing customers protect their profit margins and deliver strong performance during inflationary periods. Sectors like energy, healthcare, food, and essential goods are particularly well suited to this environment. 3. Invest in inflation-linked bonds. Inflation-linked bonds automatically adjust their nominal value and yields based on consumer price changes. In France, OATI, Treasury bonds indexed to inflation, are an effective protection tool. 4. Diversify into commodities and gold. Gold has historically retained its value during periods of economic uncertainty and high inflation. Strategic commodities, such as oil, industrial metals, or agricultural goods, also provide opportunities to benefit from rising prices. 5. Allocate a portion of your capital to crypto assets. Although highly volatile, certain crypto assets like Bitcoin are viewed by many investors as a long-term hedge against the devaluation of fiat currencies. However, a moderate and thoughtful allocation is essential to limit risk exposure. What strategy should you adopt in 2025? In a persistently inflationary environment, diversification becomes the cornerstone of effective wealth management. An example of a balanced allocation: 30% in strong, dividend-oriented stocks, 25% in physical or paper real estate investments, 15% in inflation-linked bonds, 15% in commodities, with a significant portion in gold, 15% split between crypto assets and cash in dynamic accounts. Regular adjustments are recommended based on the evolution of financial markets, monetary policies, and geopolitical conditions. Adopting a proactive, flexible, and informed approach will be critical for navigating this new economic phase successfully. Conclusion: with persistent inflation in 2025, protecting your savings is no longer just an opportunity, it's a necessity. By diversifying intelligently and adapting your financial strategy, you can safeguard your purchasing power and continue growing your wealth despite a challenging economic environment. Thank you for watching Next Vol. Don't forget to subscribe for more analyses, strategies, and financial advice to help you navigate your economic future. See you soon on Next Vol.